We are back in the Element Wealth Studios, middays, SuperTalk, Mississippi. I see what you did there, Rhino, with the Pink Floyd money. Joining us now, Jim Leggette, lecturer of economics from Mississippi State University. Good morning, Jim. Thanks for joining us. I saw the thumbs up on the Pink Floyd money. How appropriate for an economic discussion.
and actually, it's more perfect than you think, because I happen to believe, like Milton Friedman, money's at the root of all inflation, so it's even better.
Uncle Milty.
I wish I'd been smart enough to think of that.
Man, oh man. Golly. Milton, one of my favorite economists, and certainly those of us who have followed Mr. Friedman have learned a lot. He was just brilliant, and I think meant so much. Go ahead, Jim. Yeah.
Well, I was going to say, in fact, I was privileged enough to, the guy who taught me monetary theory was one, at the graduate level, was one of his students. So I'm going to claim I'm once removed.
You know, we've had Stephen Moore on the program numerous times, of course, a big student of Milton Friedman and Art Laffer, who he works with, Larry Kudlow, that group. When they get together, might be my favorite discussions with respect to finance, economics, economic policy, monetary policy, fiscal policy. It's just fascinating, their breadth of knowledge, but more importantly, the experience. And this whole inflation thing, exactly, I was going to say, this whole inflation thing, it's come around again. Of course, those individuals, certainly Kudlow and Laffer, serving in the Reagan administration. And, Jim, I had just graduated from college, gone into the workforce, and was one of those that dealt with those 18% mortgage rates that we faced, and the economic policy and the monetary policy, more importantly than the fiscal policy, that was implemented to try to kill this inflation. So we were just talking about that. You probably heard in the last segment, the White House press secretary doubled down again and said, this is totally a function, of course, the CPI data being released by the Department of Labor yesterday. This is Putin price hike. Your thoughts on that?
Chase the shiny thing.
Exactly.
In fact, you guys should have been in class with me yesterday because we were talking about this, and I had a piece from the Wall Street Journal from October of last year, and it basically said inflation is everywhere and always a monetary phenomenon. And you start with the novel monetary policy during the pandemic, and you didn't end it quick enough.
Exactly.
And by the way, we spent $6 trillion. We didn't have to.
Yeah, exactly.
What it means is whoever's the president's going to get blamed.
Great point. A point which we concur with and have made many times. That's just the way the attitude of people and the way voters react when they go to the polls. They attribute their present economic situation to whoever's in office. I've always thought that, honestly, the price of gas is a bigger factor and influence in how a person votes than maybe anything else.
Yeah, and then thinking back to the Reagan years, they had something called the misery index, sum of the inflation rate and the unemployment rate. And some have argued to add the gas rate in, and Biden's going to get blamed for the gas. But I think it's bigger than him, but he's going to get blamed.
That's exactly right. You're precisely right. Jim, the point that we've made here on the show is that it started really during the campaign when candidate Biden said, I guarantee you we're going to end fossil fuels. So when you have that sort of message, and then day one he gets elected, signs all these executive orders, many of which dealt with climate change and weaning the country off of fossil fuels, and then they just continued pouncing on that message. I don't know. If I'm running an oil and gas company, I'm thinking twice about dumping money into a new project when the government has made it clear they want to put me out of business.
Yeah, I wouldn't do it. Plus, and also remember, in 2020, it wasn't a real good year for people in the oil and gas business. We loved $1.50 gas because no one was going anywhere. But you lost about 50% of your revenue. I would maintain that was the real dagger to the industry.
In fact, in doing a little research there, Exxon Mobil, I think the largest energy conglomerate, public company, their financial statements are easy to find. I looked that up. They lost $22 billion in 2020, and they're going to make about 23 and 21. So they're just around break even for the 2 years. Yeah, I mean, in those terms, they don't talk about that. All they talk about is the profit they made in 21. They tend to forget and just dismiss the losses in 20.
And Gerard, I think you and I probably know some of the same folks in Jackson who are in the oil business, and they will tell you there was been times they were as broke as they could be, and then they will also tell you some times they had more money than knew what to do with, and the smarter and wiser ones just came up with an averaging strategy so they don't have to think that hard.
Well, but that's kind of the nature of a volatile commodity that's subject to very subject to market pressure and market conditions. It's traded as a commodity in that respect.
And our mutual friends are probably listening right now, so amen.
Absolutely. All right, so where do you see this going? So we're seeing more economists here recently, Jim, jump on this bandwagon of the R word, the dreaded R word. Some, I think earlier were saying, earlier as in a month or so ago, well, the series of rate hikes that the Fed is likely to do are going to drive us into a recession in 23. Now I've seen some recent reports from economists, Jim, suggesting this quarter may be negative GDP. One more and we're in recession.
I'm not sure about that yet. My thoughts is I'm not sure about that because I see an awful lot of people still moving around and spending money and places trying to hire folks. I think the oil going to hit you and you know what? I think it'd be instructive to look at the history of the 70s about what's going on. Because there are an awful lot of parallels. Think about the OPEC price shock. Fortunately, we're in a position we can absorb it other than just the price increase. At least we got it.
Yeah. Yeah, I agree.
And then what, like I said, being a good disciple of Milton, I think all roads lead back to the Fed. We had a very loose monetary policy in the 70s and a very loose monetary policy today. Maybe loose would be a combination. And there's really only one fix for this stuff. And in fact, you were talking about Reagan and Kudlow and Stephen Moore. I was actually working on a presentation about Paul Volcker before we came on. And what's interesting about that is he broke the back of inflation. Messing with the psychology, it was awfully expensive. So what I tell students is inflation is like weight. There's only really one way to solve a weight problem. You got to not eat as much or move more, and there's no other way. Right?
Yeah. Yeah,
and
absolutely.
We've all been told we need to lose weight. 3 pounds is easy, 50 is challenging.
I love that analogy. That's excellent. All right. Tax reform here in the state of Mississippi. The House wants to totally eliminate the income tax. The Senate wants to eliminate the 4% bracket, and then there's nuances from there: sales tax, general sales tax, grocery tax, and license plates, kind of the 4 pillars of the reform packages. Your thoughts about that?
Well, I certainly like even having the conversation. And I think it's needed. Look at our people who do economic development. They say, look at Texas, look at Florida, look at Tennessee. And they would say you almost even have to have that to get into the game. And assuming we can afford it, I'd rather go all in as opposed to halfway. So I lean towards the House side because otherwise you get some creature from Jackson that doesn't satisfy anybody.
Good point. Are you concerned? I talked about this a bit in the first segment. Concerned about macroeconomic headwinds, perhaps having a negative impact on revenue?
Well, it can't. It always has and always will. And then you think back, go back to 2000. We had so much money because of the first .com boom. I think you started your business about that time, and you were making more money. You knew what to do with, but you also smart enough to know it wasn't going to last.
Yeah.
And what we learned, you saw we did all the tax cuts and never recovered. So yeah, I worry that we think the good times will never end.
Gotcha. Jim, it's been a pleasure having you on, sir, and hope to talk to you soon. Appreciate your insight, and have a great one.
And then no one ever wants to talk about economics when things are good.
You're right. Jim Leggette, lecturer of economics, Mississippi State University, has been our guest on Middays. We'll step aside in the Element Wealth studios. We'll be right back.